The United States of America is facing a retirement crisis like no other because we have the biggest generation ever, the baby boomers, which are now entering retirement with not enough money. Right now, the median baby boomer has just over $200,000 put aside for retirement. And you might be saying, but Jaspreet, that's the median. What about the average? Maybe they have a higher amount of money put aside in the average figures. Well, if you look at the average amount of money that the average baby boomer has put aside for retirement, the average baby boomer has $162,000 put aside for retirement according to Fortune magazine. Now, when you compare the median and the average retirement accounts numbers with how much money a baby boomer will need to be able to retire comfortably, you can start to see the discrepancy. Because on the base level, in order to live a basic, comfortable lifestyle, not a lavish lifestyle, but a very basic, comfortable lifestyle, a baby boomer will need $750,000 to be able to fund and live their lifestyle. And if the average and the median baby boomer is making somewhere between $160,000 or to $200,000 put aside for their investments, they are very far away from being able to live their lives. What does this mean? Well, we're going to see more aid that will have to come from the government because that's what the government does. And then we'll also have to see more aid from their kids in order to be able to fund their lifestyle. Or we might have to see baby boomers cut back on their expenses, or we might have to see more baby boomers work later into their retirement years. That way they can continue to fund their lifestyles. But one of the biggest differences between baby boomers and younger people, let's say people under the age of 45, is going to be Social Security, because Social Security, especially for people under the age of 45, is not going to provide the same cushion that it did for elder people. See, for baby boomers and above, Social Security was a very comfortable nest egg that you knew that you would receive that would be able to fund your lifestyle. But for younger people now, the average younger person understands that, okay, yeah, Social Security isn't going to be able to fund me the way that I thought. And while on one hand, there are talks of Social Security drying up, on the other hand, you have a lot of people saying, oh no, you don't got to worry about Social Security drying up because the government can just print more money and just fund bigger Social Security checks. The only problem with that, if the government prints bigger Social Security checks, is there's going to be a cost to doing so. Because, see, the government only has one stream of income. Their income comes from people like you and me, taxpayers, some tax dollars. You and I go to work, you get paid, your investments generate a profit, your business makes money, and then you pay a piece of that in taxes. And so when the government spends money they don't have, the person who pays the price then is everybody through inflation. This is a form of taxation without representation, because if the government wanted to pass, let's just say, $1 trillion infrastructure package, it would have to go through Congress and get approved and get voted upon. And if they can get the votes, then they would have to enact some sort of tax where somebody would have to pay an additional tax in order to raise that $1 trillion to fund this new infrastructure package. But if there's no tax included and it's just a spending bill, that means the government can pass the spending bill and then go to the Federal Reserve Bank and raise this $1 trillion. And if the government can just raise this $1 trillion without putting a tax on you or to whoever they want, because they could, if they wanted to build this $1 trillion infrastructure package, they could do a tax on rich people. When rich people get taxed, you will know exactly where that money is going. If the rich people get taxed and that money is used to fund the infrastructure package, you know where the money is coming from. But when the money comes from the Federal Reserve Bank, who pays for it? Now, it's not the person who would have paid the tax, it's everybody. Because when the Federal Reserve Bank prints money to fund the government spending, then everybody pays for it in the form of inflation. Because inflation is when you increase the amount of dollars out there, which in effect decreases the buying power of each individual dollar, which causes the price of things to go up. So now, if the government wanted to pad up Social Security, they can do so. They can print more money with the help of the Federal Reserve Bank. And if they do so, yeah, they can send you huge Social Security checks. Screw a $2,000 Social Security check. They can send you a $20,000 weekly Social Security check. But there's going to be a cost to that. The price of things will rise. And we're already facing an inflation crisis right now, which means, yes, the government can send you bigger Social Security checks. Yay! but the price of everything you want to buy with your Social Security checks is growing faster than your Social Security check itself. That's what we've been seeing happen. The government has been increasing Social Security checks at some of the fastest rates we've seen over the last couple of years, but the rate at which the government is increasing the Social Security check size isn't even keeping up with inflation. And now you have to think, if you have people that are relying on their Social Security check in order to be able to survive, but the Social Security checks aren't keeping up with how fast their grocery bills are rising, what is that going to mean? They can continue trying to chase and print more money, but you're never going to be able to live the life that you want if you were relying on the government spending to be able to fund your expenses. And this is where now we are going to face a major retirement crisis, because you have this whole baby boomer generation that is now entering retirement. Most people don't have enough money or anywhere near enough money to be able to retire, but they're going to need money in order to retire. And we did a full breakdown of this in Market Briefs, which is my free financial newsletter, which is why if you haven't joined Market Briefs yet, I highly recommend you do so. It's a free newsletter where my team is breaking down what's happening in things like the housing market, the economy, the stock market, crypto, and the global economy into a fun, witty, and easy to read email. You can read this email in less than 5 minutes every morning, and it's completely free. So if you haven't joined Market Briefs yet, I got the link to how you can join Market Briefs down in the description below. And so now we have this whole generation of people that are entering retirement or getting close to retirement that don't have enough money to retire, which is going to cause problems at a time where we're already facing an inflation crisis. And this is where what's going to happen over the next 10 years. How are these people going to be able to fund their retirement? And from what we've seen happen, most likely the government will get involved again. And so now even if they don't raise your Social Security taxes, well, you will continue to fund this Social Security spending because that would increase inflation. See, the problem and the reason why Social Security is drying up faster than expected now is, number one, people are living longer than expected, which is a good thing. People are living longer, but that means the government has to continue paying out this Social Security money for more and more months. Number two is that the rate at which the government is having to increase your Social Security checks, because every year the government increases Social Security payments to try to keep up with inflation, although they're not actually keeping up with inflation, but they try to. Well, that means that the government has to pay out more and more money faster to keep up with Social Security. And then three, they're not generating enough money from the Social Security taxes. Now, of course, they could raise Social Security taxes, but that means more of your income today is going to be going into the government's pockets to fund Social Security. But again, this goes back to now, if you want to be financially free, if you want to be able to retire, the best way to do that is not by relying on a pension, because most of us will never ever see a pension in our lives. It's not by relying on Social Security, because no matter what, Social Security is not going to be able to outpace inflation. It's going to be by relying on yourself. And this means now you have to get financially educated yourself and go out and actually buy assets. That way you can create your own cash flow, or that way you can accumulate enough assets. That way you can live your life without having to worry about money and without having to stress about what the government's doing. Because the reality is inflation has been around for a long time. Inflation ever since the 2020 pandemic has become a much bigger concern, and it's on people's minds because before 2020, inflation was 2 to 3%, which is just small enough for the average person not to worry or care about it. But then when you saw inflation go up to 5, 6, 7, 8, 9% after the 2020 pandemic, that was when people really started to get worried about inflation. And even if inflation continues to fall, if inflation is rising faster than people's wages, that means that the average person is becoming poorer. And the Social Security fund continues to dry up even faster. And this is where now understanding, okay, we have this inflation or retirement crisis happening, and it becomes even more important for you as a financially savvy investor to now go out and start accumulating those assets. And the reality is we're never taught this stuff in school. And you might wonder, well, why are we never taught this? Well, our school system is not designed to breed financially wealthy people. Our school system is not designed to breed entrepreneurs. Our school system is not designed to teach you how to invest. Our school system is designed to do one thing, is to teach you how to become an employee. Now, there's not a bad thing to be an employee. It's not something wrong to be an employee. We need good, smart, hardworking, dedicated, innovative employees, even entrepreneurs. Not everybody can be an entrepreneur. However, everybody can be financially educated and everybody can be financially smart. But unfortunately, our education system lacks in that financial education because the average person graduates school with not a single bit of knowledge of how to invest their money. You go and get a job and you might be skilled at how to get a job, but then you go get this job and you have no idea what to do with this money. Maybe your employer gives you a pamphlet about what their 401k is and everybody around you starts talking about how much they love their 401k. So then you do the same thing. You open up a 401k if you're lucky, because most people actually don't even have a 401k. They have no investments at all. But if you go out and do what everybody else does and you start opening your 401k, that might be the extent of what you do. But this is where that financial education becomes so important, where it's something that we're never taught. And now you have to go out of your way to learn how to do this. And unfortunately, in this system that we have, the people that build the most wealth are not the people that have the best jobs or who work the hardest at their jobs or who work to climb the corporate ladder the most. It's the people who accumulate the most assets. And this doesn't mean that you have to be born with a silver spoon in your mouth. It doesn't mean that you have to be born with $1 million. It doesn't mean that you have to be born with rich parents. It means you have to understand this. It means you have to understand that the more assets that you buy, the wealthier you will become. And that means that you want to use more of your income today to buy more assets, whether it's stocks, whether it's real estate, whether it's investing in businesses. The more assets that you can accumulate, the more cash flow that you can generate. The more assets that you can buy, the more wealth that you can build. But it starts with you starting. And you can start with as little as $100, but you have to get started because the reality is in this economic system, the people who become wealthy are not the people who have the best jobs. It's not the people who have the best degrees. It's not the people who have the best titles. It's not the people who have the richest parents. It's the people that accumulate the most assets. And this is one of those things where if you do not understand this, you are going to be at the mercy of people who have money, because then you're going to constantly be working to pay off your rent. You're going to constantly be working to pay your car off. You're going to constantly be working to pay off the vacation that you took 6 months ago. And this is where now you have to take a step back and understand that this is the way that the system is. And if you don't learn this, because school doesn't teach you this, and most of our parents don't teach us this, because I never learned this in school. My parents never told me a thing about investing or real estate investing because they didn't know it either. But now, thanks to YouTube, this information has become so much more accessible. And this is where now you have to go out and do something about it, because we're seeing what's going on with baby boomers. Baby boomers are going to face a very tough time in retirement, and we're going to see more and more young people now have to turn around and start supporting their baby boomer parents or grandparents, which is going to be very interesting, especially with whatever's going to happen with student loans, because student loans still are, at the time of me recording this video, paused. And if student loans get reenacted, you bet that there's going to be a whole wave of young people that all of a sudden have been living paycheck to paycheck, have this brand new bill, which they completely forgot about because over the last number of years, nobody has paid a student loan payment. And now if a whole wave of young people get hit with now a new student loan payment that they forgot about, and then a little bit after that, they also have to send some money back home to mom and dad because they need money to be able to fund their retirement. That way they can go on vacation and do nice things. You can bet that that's going to put more stress on the younger generation, which is why now you need to understand that you want to be able to be in a situation where you can take care of yourself, take care of other people. And the way that you do that isn't by just working harder at your job. It's by accumulating the assets. And now you have to understand where your job comes into play. Your job is what produces you an income. It's what produces you an earned income. You have to go to work to earn this money. Your assets are what produce a passive income. So now you want to go to work to get this earned income. That way you can get more passive income because there's a limit to how much you can earn, but there's no limit to how much you can passively get. So you need to go out and earn that money. That way you can go and buy more of these investments that will pay you with the cash flow. But that means now, how can you earn more money? Now, of course, you can do it from a job. You can work to start your own side hustle. You can start your own business. You can be a freelancer. There's so many things that you can do, but you have to start earning your money the right way, which means you might have to sacrifice some of the nice things right now. That means you might have to sacrifice some of the parties. You might have to sacrifice the car. You might have to sacrifice some of the vacations. You might have to sacrifice how much you're eating out. You have to sacrifice some of the spending that we have our money to buy assets. And that doesn't mean you want to just cut back. I recommend you cut back and earn more. But this is where now, why are you earning money? The average person earns money to buy things, but wealthy people and people who aspire to become wealthy earn money to buy assets. The majority of Americans cannot afford to buy a home. That's according to data that came out in 2023, which says that about 6 out of 10 Americans cannot afford to buy a home in this economic environment. Now, that being said, we're not seeing homes in the housing market becoming more affordable. In fact, every time we see a little dip